Yo, what is going on? It is Maleki, the growth and dividend growth investor. Welcome to the channel. In today's video, we will discuss my option plays for the week of March 12th, 2021. Let's get started. The first account that we're going to talk about is my Robinhood account. Then we'll go to my Fidelity, and then the third thing that we'll do is we'll head over to my options spreadsheet, where we'll discuss all the different trades we had throughout the year, as well as how much income I've made so far. So the first thing is, in the Robinhood account, total value is $18,544.97. I started this account December 18th with about $16,000. So it is, this account is gained $2,000 ever since I deposited the $16,000. In this account, I'm not adding any of my own money. So whatever money I generate from the covered calls, that's the money I'm going to use to reinvest into stocks and keep building this portfolio. But none of my money will be going into this account. Whereas in my Fidelity account, I actually will put in a little bit more money to grow that. So, this is the price. Currently the market's still open, so it's like 2:23 Midwest time. And what I own is I own a company called PLTR. I have 836 shares of this stock. What this stock does is it works with governments and larger corporations is a software platform that makes the companies and governments more efficient. So it's really like a pure play data analytic company. So I own 836 shares of this. Initially, when I got this bucket of shares, I had 800 shares, and every single time I get the income from the covered calls, I am putting it back into this. So let's just talk about the plays that I did. So what I actually did is every single Monday I put in my covered calls. Now what I did this last week is on Friday, you can tell that the last week the price of the stock has been going down, and most of my options will always expire on a Friday. Well, what I did this time is I actually bought the covered call back from the market, and what I did is I decided on Friday to actually invest in a call for the following Friday. So what I did is, I did press this, and when I pick companies to do the covered calls for, normally I try placing the calls at around a delta of 0.3. I feel with a delta of 0.3, it gives me enough room for the stock to go up where I can catch some appreciation as well as harvest a good amount of premium. So pretty much what I did is I bought the call from the following week. So I had the $27 call. It was worth a couple dollars. So I paid $32 to buy all 8 contracts back. And what I did this week is I sold a call, very important, March 12th, so this Friday. And you can see here I have -8, so I have 8 calls here at the $25 mark. I happen to acquire these at 60, so to just place this covered call is what you do is you press on here, you press continue, and you press review order, and that pretty much will execute the trade. Sometimes there will be like a little bit issue, like if the share price increases drastically or decreases drastically, sometimes it won't execute right away. So if you run into that issue, what I would say is just to look at the share price, and if it dropped or increased drastically, cancel that order and then just put another one in, and it should execute pretty fast. When you get paid the premium, you'll get paid the premium immediately. Like, you don't have to wait a whole period of time, like you get it right away. So you will see here, if I just go to the history of all my transactions for this, I got paid out, I got 8 contracts for 60 cents per share, which for 100 shares, it's $60, and 60 times 8 is 480. So I got paid $480 for that. In my Fidelity account, very similar concept. I bought my Tesla call back on Friday. I think I paid like $3.04 for it. I bought that back, and then I sold it for this Friday for the 12th. So this, if you see this covered call, this is where I made $29,500 selling 2 covered calls way out of the money 2 years from now. And then this is the call price. Like that Friday, same thing happened. Even for this Tesla, like I like to have the delta of 0.3, and what at that point on a Friday, it was close to that. So what I did in the Fidelity account, just to show you guys like how it looks in a different trading platform, is you could press trade up here, and you want to make sure it is the correct account. they always have it flip-flop, so you just make sure you put the correct account in. It says stocks, ETFs here. You want to switch that to options. And then this screen pops up, and then we are doing Tesla. Calls and puts, Tesla, and then what we are doing is we are selling to opens because we are selling the right for someone to buy this. It's going to be one share or one contract, and then make sure it's the correct time. And then we decided that the 30 delta or the 0.3 delta was going to be 645. Call, and then we're going to do a market order. If you do a limit order, sometimes it might not execute right away. If I gain or lose a couple bucks just because I put a market order, it really doesn't bother me. But you do a market order if you want it to execute faster. If you want a limit order and have a set price that you will not live life without hitting that price, then you can do a limit order. But I don't necessarily want to be wasting my time with that. So then what you do is press preview order, but then you see on my screen an error popped up. I don't have any more shares to do this covered call. So you need 100 shares to do it. I have 300, all 300 are locked up. I can't do a naked call or I can't do a naked put. So this error pops up, but if you had the 100 shares ready and being ready to be deployed, you could just execute that right away. So then the screen would have popped up, it would have reviewed order, and boom, you would have got the money right away and you would have placed the call. So pretty much that's it. For this payout, it was 1,290. They immediately subtracted the 70 cents it costs to do an options trade in Fidelity, which I don't like to have to pay any type of commissions to do an options trade. If you're just buying and selling regular stock, it's free, but if it's options, it's 70 cents per an option. So we talked about my Robinhood account. So again, we're growing that naturally. The Fidelity account, we're still doing that, hitting that 30 delta, and we're just recycling this every single week. Now, if for whatever reason, if Tesla blows past the share price, in my head, I am ready to buy that call back and put it out further. So pretty much, let's go back to Tesla. So sell call. All right, so the price is 561. I put the sell price at 645. For whatever reason, if the share price is getting really close to this, if not blows past the actual sell price or the strike price, I will actually buy back this call and then possibly sell it next week. So, if I did 645 this week, it blew past it. So I may have to bump this up a little bit higher to one of these. So, I will have to expense what it would cost for me to buy the call back, but I never want to sell my Tesla shares. The whole reason I'm doing options investing is to optimize being a long-term investor. So ideally, I would like to keep the shares, but I would like to just generate some more income with it. If it's close to being taken away from me, I am willing to pay the price to get those back so it's not taken away, and then I live to fight another day. So that's pretty much my thought process associated with that. Let's talk about my options spreadsheet. So in this options spreadsheet, I'm gonna have every single options trade that I've ever done in my entire life. I only started options investing December 18th of 2020, so like literally 3 or 4 months ago, started investing then, and you'll see all the amount of premium that I've harvested over here. And there was only 2 times that I had my options assigned. This first one was assigned because I was a noob and had no idea what was going on, and I had no idea you could actually buy the contract back and sell it later on. So there's one episode here where it was sold, and then there was another one that was sold over here. Not a big deal. I just paid the stupid tax for that. Moving forward, the companies that I'm holding right now, these are companies that I'm willing to hold for the next 10 years. So ideally, I don't want to get rid of them. So the fact that these were assigned, I was a little upset, but at the same time too, like in my long-term play, that was okay. So if you look for this week, for the 12th, I harvested about $1,707 worth of income if you subtract the expenses. So these expenses are what it cost me to buy back the calls, as well as the Robinhood interest finally came back because I was borrowing money for Robinhood. I've totally decided to not use margin anymore, and ideally I would like to liquidate all of my margin. I still owe $54,000 in margin, but I used to have $92,000, if not even higher than that. So in my Robinhood account, I have no margin, and then in my Fidelity account, I still have about $52,000 worth of margin. So I really just want to get rid of that because I'm paying interest on that. And if the share price drops far enough, I actually may be forced to sell the shares, and that is not a likelihood or a scenario that I want to deal with. But you know, everything's over here, so I made about $1,700 this week, which is pretty good. If you look over here to the right of the screen, I work as a registered nurse, so I'm a blue collar worker. My average monthly income without any taxes taken out is about $6,194. With this, I pretty much, so that comes out to about like $1,600 a week. So this last week alone, I pretty much made the same amount of income as my salary or my position as an employee as I did in options income, which is a pretty interesting thing to think about, where, you know, if you do this long enough, you can actually possibly retire using this type of strategy. But again, we're pretty much new to this. You know, I've started when we were raging bull market. It's, you know, we're having a massive correction now. We'll just see how it goes from there. But it's really interesting to see what the month of March will be, especially because for these time periods, I was using margin aggressively to get more, or to harvest more premium. But, you know, I had a couple situations where I was almost forced to a margin call, so I had to get rid of my assets or sell my assets not a little bit of a loss. I sold them at a loss, but overall I'm still in a positive, but I just don't want to be put in that situation again. And when you don't owe people anything, that's the position you want to be in. So I want to liquidate my margin. So for the next coming months, my option income might be half of this, but it still would be pretty interesting to see if it's close to what I would be making as a registered nurse. So let's talk about just like overall gain over here. So total premium I've ever made is $56,507.47. All the total expenses here have been added up for either the margin interest, the Robinhood Gold that I pay for, as well as any commissions in the Fidelity account that cost 70 cents to execute trades. So pretty much these are all my expenses. And then this is how much I made from capital appreciation. And so pretty much total amount harvested after these expenses is $55,377. And then this is gain from sales. So what I did is, I also want you guys to be thinking about your tax situation. So if you're making this amount of money per year, you don't want to be figuring out your taxes after the fact. You want to proactively be thinking about your taxes. So what I did is, whatever this was, I multiplied by 0.37 because I'm going to assume that I'm going to be in the highest tax bracket after this next year is going to be completed. So with being at a 37% marginal tax rate, the amount I need is $21,000. But just because I need $21,000 to pay as taxes doesn't mean I'm just going to keep piling $21,000 into a separate account for me to pay this tax off. What I'm going to do is, I actually want to deploy this money so it could actually gain me more money. So then when it is time to pay taxes, what I'll end up doing is I won't pull from a cash account. What I'll do is I'll just sell some stock and then use that to pay for it, and then kind of rinse and repeat this. So that's kind of the plan going forward. So pretty much the reason I'm making this video is, you know, to those like newer options investors, like I'm trying to figure this out, and hopefully, you know, I can help you guys also figure this out, and, you know, maybe together we could build a really good thing going on over here. So I appreciate you guys watching the video. If you can, don't forget to please like, comment, and subscribe. It would really mean a lot to me, and I hope all of you have a great day.